Hello everyone, welcome to Options with Doug. Streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also on Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X, formerly known as Twitter. My name there is @Pless. Here are the key tenets to my approach to trading. This is the basis of my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price of many stocks and futures, and certainly in the large cap tech stocks that I follow and trade, like the Magnificent Seven stocks, and also for the equity index futures like the S&P 500 and the NASDAQ 100. And for the S&P 500, SPX is the underlying index. SPY is the ETF version of that index, and ES is a derivative of SPX and SPY. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades, and they hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index, QQQ is the much more liquid ETF version of that index, and NQ is a derivative of NDX. And when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. Here's the focus of my presentation today in the Options-Doug chat channel. Options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as the directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis, and for setups or entries and exits. And when I talk about setups today, I will be focusing on an underlying asset, but setups in that asset can be taken with stocks, options, or futures, depending on what the asset is. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. Hello, Stephen. Welcome. Glad you're here. Hello, everyone else. Welcome. Glad you're here as well. Here's my agenda for today, Friday, May 31st. First of all, I want to go over news items, economic data. There was a big release today. Then I'll go through my positional analysis. Then I'll review some setups from earlier today, and I've got a lot of setups to review. And then I'll get to the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know, and I'll be glad to do that. All right, let's get started with economic data. Again, PCE data, big economic data release this morning. So let's take a look at that. I forgot to bring that over. Give me just a moment. PCE data came in pretty much, this was released at 8:30 a.m. Eastern Time this morning. It looks like it came in line across the board. And let's take a look at the reaction to that data release. This is the ES futures and Bookmap, the S&P 500 futures, and this is the reaction to the data release at 8:30 a.m. Eastern Time. Initially bullish, found resistance at the SPY 525 volatility trigger. More about that in just a minute. And hello, sorry for my pronunciation. Sumit, watching from India. Welcome. Very glad you're here. All right, so initial bullish reaction. S&P 500 found resistance at the SPY 525 volatility trigger and moved lower. All right, so that's the news. Let's move on to positional analysis now. All right, so again, this is the S&P 500 futures, ES futures, and Bookmap. And before I take a closer look at this chart, I do want to take a look at a larger time frame. I'm going to go to the SPX. This is the underlying index. I'll go through this quickly. We've seen this chart before. 5-month rally began last year, October 30th. Correction began April 1st. Rally resumed the Monday after the April 19th options expiration. That was Monday the 19th. And now another correction has begun. That was starting last Thursday with a big spike in interest rates. Let's take a quick look at that. This is the 10-year yield. This is last Thursday, Thursday the 23rd, Thursday last week. Sharp increase in Treasury yields, and that's when that correction began. Now the market continues lower, even though the 10-year has been moving lower for the last 3 days, two or 3 days. All right, let's move on. Let's take a look at a 1-hour chart for SPX. SPX 30-day 1-hour chart. This is the April expiration. Rally resumed the Monday after that expiration. There's where the move lower began. Again, Thursday last week. Let's take a look at levels on this chart now. First of all, the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market, based on the closing price last Friday. These levels remain in place for the entire week. SPX is obviously trading well below the lower weekly expected move. The dashed blue lines are showing the lower and upper daily expected move. Also based on the options market, based on the closing price for SPX from last Friday. That lower daily expected move initially held as support. It looks like SPX broke through that level and now is moving higher. All right, so those are the expected moves. Now let's take a look at the Spotgamma levels on this chart. These are the dark red lines. These are Spotgamma levels. They're based on gamma-weighted open interest. They're provided to Spotgamma subscribers, available on a variety of trading platforms. Again, this is Thinkorswim, a 30-day 1-hour chart. Let's take a look at the key daily levels. First of all, here's the put wall at 5,200. That level was tested today. That is the strike with the largest net negative gamma that can be expected to act as support. Price did breach that level, now trading up above that level. So that's the put wall. Strike with the largest net negative gamma expected to act as support. The next level up is the volatility trigger at 5260. That is Spotgamma's proprietary volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility, and that is definitely a factor for today in a negative gamma environment. Both up and down. We'll take a look at the vana model in just a moment. The next level up is the 5300 absolute gamma strike. That's a strike with the largest absolute positive and negative gamma. And then finally the call walls at 5400. That's a strike with the largest net positive gamma that can be expected to act as resistance. So the put wall much more in play today than the call wall. And note the only level that shifted lower was the volatility trigger, and that did shift lower from yesterday. All right, so those are the SPX levels. Let's wrap up our view of SPX with a 1 minute chart. SPX 1 day, this is showing about 3.5 days worth of data just to show the downtrend. So SPX did trade below the lower daily expected move, as well as the 5200 put wall, now trading higher. Note it has been below the volatility trigger all day, opened below that level, and has moved lower. So the SPX definitely had a negative gamma environment. All right, let's take a look at Bookmap now. So again, Bookmap, resistance before the cash open at the 525 volatility trigger, and then after the cash open at 930, this SPX 5250 level that was noted as resistance in the Spotgamma AM Founders Note acted as resistance along with the 525 level, and the S&P 500 moved lower. So note, I do have my own cloud notes, so I can show SPX levels as well as SPY levels on this chart. So again, here's the SPY 525 volatility trigger, and then the SPX 5250 level. Note there is a difference in price between ES and SPX. That offset today is about 14.5 points. So ES minus SPX is right around 14.5. I do post those index relationships in Discord every day. Note now it looks like the SPY 521 level that acted as resistance before may be acting as resistance again. And down here you can't see the label. There's the SPX 5200 level, the put wall, and below that a combo 1 level combining SPX and SPY gamma weighted open interest into one combined level. We'll take a look at setups in just a minute. So those are the levels in play for today. For the S&P 500, let's move on. Let me wrap up. The S&P 500, I talked about shifts in levels for SPX. Volatility trigger shifted lower. And for SPY, the volatility trigger and the absolute gamma strike shifted lower. So now for SPY, the absolute gamma strike, also the put wall is at 520. So earlier today, the S&P 500 breached both the SPY put wall and the SPX put wall. Now trading back above. All right, let's take a look at NASDAQ now. There are quite a few lines on this chart. So this is the NQ futures and Bookmap. And I'm going to take a look at charts for the underlying index so we can make a little bit more sense of this. First of all, I'm going to start with QQQ. So again, I have QQQ levels and NDX levels on this chart. Looks like I need to move some levels down, round number levels. All right, so just like the S&P 500, The QQQ, in this case 453 volatility trigger, acted as resistance before the cash opened, just after the reaction to the PCE data, acted as resistance. Price started to move lower. Note that QQQ breached the 450 put wall and now traded down below this cluster of levels here, the 445, large gamma 3, and there's a combo 3 level just below that. And it looks like the round number level, that's not a spot gamma level, just 443 acted as support. All right, so those are levels in play for QQQ. Let's take a quick look at NDX. Most levels up above. Now for NDX, the call wall is back above the put wall. And NDX trading below both of those levels, as well as the volatility trigger. All right, let's go back to NASDAQ. NQ futures. So again, key levels here. This upper cluster of levels, that was the QQQ 453 volatility trigger. You can't see the label there. Also the NDX 18,590 volatility trigger and the 18,600 call wall, absolute gamma strike. Just above that, that cluster of levels acted as resistance. And then at the cash open, the QQQ 452, good entry point for a short. And here's the QQQ 453 level. Acted as support so far for today. All right, let's wrap up our view of our positional analysis by taking a look at gamma notional. This is market maker's position on the gamma curve at the beginning of the day. Gamma notional for the S&P 500 and NASDAQ. Note all these numbers are negative with the exception of NDX, which is pretty much flat. That's 0.381 million. It's really not significant most of the time anyway. All right, so note again, these numbers are negative, shifted lower from yesterday, starting to become significant for SPY at 1.368 billion, negative gamma notional. So in this position on the gamma curve in a negative gamma environment, this indicates traders are long puts, market makers are short puts, hence the negative gamma. They have to trade with price to hedge their delta exposure. All right, let's take a quick look at the Vanna model to get an idea of what that means. This is the Vanna model for SPX. What this chart is showing is market makers delta notional on the vertical axis, spot price for SPX on the horizontal axis. And let's take a look at some prices for today. Before I do that, let me explain the lines on the chart. There are two lines on this chart. First of all, the dark gray line shows how market makers delta notional changes with changes in price only. The purple line adds implied volatility to the equation. That shows how market makers delta notional may change with changes in price and implied volatility. And note the additional increase as price drops down, implied volatility increases to market makers delta notional when you account for implied volatility. And remember, market makers want to remain delta neutral. All right, let's check prices again. Let's go to our one-day chart, 1 minute chart. All right, so the high of the day for SPX was right around 52.56. Low of the day right around 51.92. All right, let's check those prices on the Vana model. All right, so first of all, high of the day. Right around here, 52. That's 52.54, 52.57, right around here. High of the day. Price drop from there. So this indicates, we're looking at the purple line, this indicates as price dropped, implied volatility increased, market maker's delta notional was increasing. Price drops, delta notional increases, market makers want to remain delta neutral. They have to sell futures to hedge their delta exposure. All right, let's check on prices again. So we know the low of the day was right here. I didn't draw my arrow quite far enough. Low of the day. So as price started to increase, implied volatility dropped. Market makers could buy back their short futures. Their delta notional was decreasing, and that helps to fuel a move higher, a put Vana rally. So in this negative gamma environment, this works both ways. Market makers trading with price to hedge their delta exposure. That tends to enhance or increase volatility. All right, let's wrap this up. Oh, I forgot to mention for NASDAQ, put wall for NDX move lower, and the volatility trigger for QQQ shifted lower. All right, so my thesis for the day. First of all, I was looking for high volatility based on the increased negative gamma notional, or more negative gamma notional. So looking for higher volatility, more trend day. In a positive gamma environment, I'm looking for more mean reverting trend range days. Today, definitely looking for a trend day. Also, directional bias bearish based on the shifts lower in levels. All right, let's review some setups now. I'm going to start with the S&P 500, and I'm going to start, as always, by taking a look at what options traders have been doing today. So this is the HIRO signal, HIRO, Hedging Impact Real-Time Options. This is available to Spotgamma subscribers. And this is first of all, what this chart is showing is a combined signal of options trades and market maker hedging activity for SPX, SPY, XSP, and ES futures. There are two lines on this chart. The first, the white line, is price for SPX, and the purple line is the HIRO signal. A falling HIRO signal indicates traders are taking negative delta options positions. They're buying puts and or selling calls. And a positive delta position, or a rising purple line, indicates traders are taking positive delta positions. They're buying calls and or selling puts. This is the traditional signal that has been around for quite some time, this combined signal of SPX, SPY, XSP, and ES futures. And again, when traders buy and sell puts and calls in any of these instruments, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. There's a new HIRO signal for the S&P 500. This is the S&P equities. Today, I think it provided a more clear signal. This S&P 500 signal is often more choppy than this S&P equity. So we're going to take a look at this signal today. So this is another combined signal, an aggregate signal of all 500 stocks in the S&P 500. This is showing options trades and market maker hedging activity for all 500 stocks in the S&P 500. All right, let's zoom in on this chart. All right, one thing I'm going to do now is, and again, this is the hero signal and the white line is price for SPX. I'm going to separate out puts and calls. And I'm going to jump to avoid the auto zoom, jump back. All right, so what this chart is showing, orange line showing calls, and a falling orange line indicates traders that are selling calls. A falling blue line indicates traders are buying puts. Those are both negative delta options positions. Blue line, orange line moving in the same direction, starting just about 10 or 15 minutes after the cash open, and price moves lower. All right, let's go take a look at ES now. Let's zoom in on this chart just a little bit. So we're going to take a look at the S&P 500 right around 940, 945. That's when the call line started to move lower. Blue line started moving slightly lower, and then right around 1010 started to move sharply lower, more in line with the call line. All right, let's go back to Bookmap now. Go to the S&P 500. We'll zoom in. All right, right around here, 945. That's when traders started selling calls. A few minutes later, started buying puts. At that time, gave you an opportunity for a second entry. They're just below VWAP. That's the light blue line. Let's take a look at the order flow in Bookmap. The green volume dots are showing market buy minus sell. Magenta dots, the volume dots are showing market buy minus sell. Green volume dots indicate more buyers than sellers. Magenta dots indicate more sellers than buyers. Aggressive buyers move price up just to below the 525 level. Aggressive sellers start to come in as traders are taking negative delta options positions. More magenta volume dots, aggressive sellers. You can see here in the subchart, this dark blue to magenta line, that's cumulative volume delta, steadily dropping. Also this yellow line showing stop orders. So aggressive sellers and sell stop orders fueling the move lower. And eventually down to the QQQ 5200 level and below. All right, so that's the S&P 500. Short setup about 15 minutes after the cash open as traders started taking negative delta positions in net as a whole in the S&P 500 stocks. All right, let's take a look at NASDAQ. Very similar story. Here's the cash open. 930 right here. Whoops. We'll zoom in so we can see this. All right, cash open, 930, 945. Reversal right around the 452 level and the NQ 18,600 level. Again, large magenta volume dot aggressive sellers. NQ breaks below VWAP and continues to move lower. Again, cumulative volume delta falling, as well as sell stop orders fueling the move lower. This light blue line is showing iceberg orders. Large traders use iceberg orders to hide their size. Rising light blue line indicates large traders are buying with iceberg orders. This is pretty typical. Large traders fading the move lower. So they're buying weakness with iceberg orders. And certainly large traders can typically withstand a lot more pain than us smaller retail traders. All right, let's go take a look at Hero and see what options traders are doing. All right, so again, there are two signals that we can use for NASDAQ. Just like the S&P 500, there is a NASDAQ signal that combines options trades and market maker hedging activity for NDX and QQQ. In the case today, this signal is not providing much clarity. And more often than not, I take a look at the Mag 7 signal for the NASDAQ, very similar to the S&P equities, except this is showing options trades and market maker hedging activity for the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, NVIDIA, Tesla. All right, let's zoom in on this chart. This is what I'm going to use today for NASDAQ. So very similar to the S&P equities chart. Call line moves lower first, just right around 940. Put line a few minutes later starts to move lower. Orange line, blue line moving in the same direction. Very powerful directional indicator. In this case, it is bearish. Traders are selling calls and buying puts. Let's go take a look at NASDAQ again. So NASDAQ breaks lower. Aggressive sellers start to come in. Price breaks below VWAP and ends up going all the way down to the, so far today, to the QQQ 443 level. All right, so far, great short setups in the S&P 500 and NASDAQ. By the way, if you trade any form of the S&P 500, whether that is ES futures, SPY shares, SPY options, SPX options, I recommend using this chart. Just subscribing to rhythmic data and putting the SPY and SPX levels on this chart. Again, for trading any form of the S&P 500. Same for NASDAQ. Whether you're trading NQ or QQQ, I recommend just using this chart. All right, let's take a look at some stocks. There were multiple good short setups. And I'm going to go through the list that I have. If anybody has any stocks they want me to take a look at, please let me know, and I'll be glad to do that. All right, so first of all, AMD. Initially bullish. And let's see what, first of all, note, let's take a look at order flow here. Aggressive buyers up to around the 169 level. Very notable shift in order flow. Aggressive sellers start to come in. Cumulative volume delta starts to drop. And price moves down, breaks below VWAP right here. Aggressive sellers come in and move price all the way down to the 160 put wall. Note all the high liquidity at that level. This is very typical for a stock. These are limit buy orders that come in at these levels. Below price limit buy orders typically remain in the order book until they're filled. In this case, it looks like price reversed just above that level. That's very classic absorption. Price reversed higher just above the 160 put wall. Note, it looks like now it's consolidating around the 162.50 hedge wall. All right, let's see what options traders are doing. Let's go back to Hero signal. All right, so this is the Mag 7 signal. Let's just take a note of this, of these times again. So the call line starts to move lower right around 9:45, 9:40, 9:45, and the blue line starts to move lower about 10:10. All right, so that's the Mag 7. Let's take a look at AMD. A little bit choppy, but we can see here that the price reversal was right around 10:10, right about the same time that the hero signal for Mag 7 started to move lower. The put signal started to move lower. Also note the call signal starts to move lower at the same time, right around 10:10. Much more choppy than the hero signal for Mag 7, but pretty clear here, the shift, the reversal lower, right around 10:10. All right, let's go back to Bookmap. And again, very easy to read here in the order flow in Bookmap. All right, let's take a look at Amazon. Next stock on my list. Very bearish day here in Amazon. Price moving lower pretty much just after the cash open. Big green volume dot on the opening print. Price breaks lower pretty quickly. Aggressive sellers come in. Price breaks below VWAP. Makes a series of lower highs. Very steady, very mechanical, all the way down to 174. Let's see what options traders are doing. Let's go to Amazon. Let's zoom in on this. So pretty clearly, call sellers were driving price lower, shown by the falling orange line. Traders sell calls, market makers buy the calls. They have to sell stock to hedge the delta exposure. Note the flow alert that comes in right around 9:35, signaling significant options activity. Price moves lower. And again, they were primarily selling calls. They're also selling puts. That's shown by the positive notional value there, the slightly rising blue line, but call sellers definitely in charge. All right, so that's Amazon. Let's go back to Bookmap. Very steady mechanical trend down. We can zoom in on this. This is the market pulse indicator shown on the subchart here. This is the market pulse price change algorithm, and I look at these extremes to help confirm entry points, pullback entry points for short. Note how the good entry points line up with this price change indicator, except for this one pullback entry here. So price moving below VWAP, cumulative volume delta falling, aggressive sellers, hero moving lower, price change, market pulse price change indicator marking entry points, pullback entry points for short, and this checks all the boxes on my checklist for short. All right, let's move on. Next stock on my list, ARM. Very similar to AMD. Initial move higher. Price break, in this case, it was a little bit lighter. Price break below VWAP. Aggressive sellers start to come in. Price moves lower. Breaks below the 120 key gamma strike and did not quite make it to the high liquidity at the 115 hedge wall. Let's see what options traders are doing. Go to ARM. So right around 10:10. Actually, that is about the same time as AMD. Initially, traders were selling puts and selling calls. So selling strangles, then the blue line reversed. Traders started buying puts and selling calls, resumed selling calls. Blue line, orange line moving the same direction. Price moves lower. This is a very typical pattern. The options traders take their foot off the gas. They stop selling calls, stop buying puts, and price consolidates in this case. Go back to Bookmap. That's ARM. Next one, CrowdStrike. This is pretty new to my list, but definitely a great mover. I need to remove some of the intermediate lines here. Note 330 is the key gamma strike. That was about at the opening print. Price dropped sharply lower, very quickly. Initially consolidated right around the 310 put wall. Found support there, and then finally it broke lower. Let's see what options traders are doing. Back to Hero. Go to CrowdStrike. Zoom in on this just a bit. Couple of flow alerts right at the open. Traders are buying puts, selling calls. Price moves lower. Note the very steady drop in the price line. Let's zoom in on this. So it looks like the market pulse price change indicator. Maybe price was moving down so quickly it didn't have time to note extremes. But anyway, the high points marked pretty good entry points for shorts. You could have pretty much gotten short anywhere. And by the way, the best way I thought to play all these stocks moving lower was just to buy puts. That was the easiest way with so many opportunities for shorts. All right, the next one, let's take a look at Meta. All right, ET1 says, thanks for your work and time. You're very welcome. ET1 says, please check QQQ. I mentioned this earlier. I don't have QQQ on my chart here. I look at NASDAQ for QQQ. I look at the NQ signal, whether I'm trading NQ futures, NDX options. I would not trade NDX options, or QQQ shares or options. So if you missed that, go back to the beginning, and I did cover NQ. And I'll take a quick look in it in just a minute. So another bearish day, very bearish day here in Meta. We'll see what options traders are doing. Go to Hero for Meta. Traders definitely selling calls. Very clearly. Flow alert comes in. Price breaks below the 460 put wall, shown here. And then as right around 1045, 1050, traders take their foot off the gas and price consolidates. Now it looks like they may be buying a few calls. Price moves lower. And they are also net for the day buying puts. That's shown by the negative notional value there. But call sellers and now call buyers definitely driving price. For Meta, very sharp drop lower. Let's zoom in on this. There's the 460 put wall. Price broke with through that pretty quickly. Market Pulse, price change indicator, did mark this area as a pullback entry for short. Note the aggressive sellers come in as price breaks below VWAP, and traders are selling calls. Zoom back out. So it looks like the low of the day was right around 455. Limit buy orders, looks like they were consumed here. Shown by the heat map and Bookmap, the history of limit orders, and it looks like they were consumed here again just before 12:30. Now it looks like price is consolidating just below the 460 put wall. Next stock on the list, Microsoft. Very bearish morning. Let's see what options traders are doing. Go to Microsoft. Zoom in on this a bit. Sometimes the hero signal from Microsoft can have these large vertical moves like this. I think there are a lot of institutional traders. This is showing a large block order, one or more very large block orders buying puts. So initially, traders are selling calls, again shown by the falling orange line. Flow alert comes in just a few minutes after the cash open, and then really starts to break lower after this large block order of puts. So after that, blue line, orange line moving in the same direction. Price moves lower. All right, aspire to trade. Can you show NQ? Yeah, I did show NQ earlier in the day. I'll get back to it. But you can watch the recording and go back. Probably, I'd say go back maybe 20, 25 minutes from now. All right, so here's Microsoft. Sharp move lower. Then price starts to consolidate as traders take their foot off the gas. All right, let's take a look at NVIDIA. We'll go back to Bookmap. One interesting thing here, I'm not quite sure what this is. Actually, let's go back. So that happens right around 10:19. Let's go back to the hero signal. Go back to Microsoft. So actually that very large volume dot did happen before the put line dropped. This is pretty unusual to see such a large volume dot right in the middle. A lot of aggressive sellers there. So large that it is larger than the opening print. That's very unusual for stock like Microsoft. And point of control now moves down to that level. All right, let's move on. Take a look at NVIDIA. All right, right around 10.10, 12, 10.12. Price breaks below, oops, sorry. Price breaks below VWAP and the 115 hedge wall. You can see cumulative volume delta has been falling all day. You can see all the magenta volume dots as well. A lot of aggressive sellers in NVIDIA. Let's see what options traders are doing. NVIDIA, this is very signal, actually, this is the hero signal for NVIDIA. The Mag 7 stock is typical, hero signal is typically very similar to the NVIDIA signal. Traders selling calls starting right around 9:40. Then around 10:15 they start buying puts. Orange line, blue line moving in the same direction. NVIDIA breaks lower. Options traders take the foot off the gas right around 12:30, and now price trying to move higher. Let's go back to Bookmap. So there's the break lower right around 10:10 as the put line started to move lower. Then a sharp move lower, and then NVIDIA did breach the 1080 put wall. All right, let's wrap up with Tesla. Then we'll get back to NQ. There have been a couple requests for NQ. All right, so another bearish setup here in Tesla. Falling cumulative volume delta, shown by the magenta line there in the subchart. Price breaks below VWAP. That's right around 10:20. Let's see what options traders are doing. Go to Tesla. All right, so traders really started selling calls just before 10:15. Price had already started to move lower. And then the blue line joins the orange line moving down, and Tesla moves lower. Note 175 as the key gamma strike, and as price broke below that level, options traders took their foot off the gas. All right, let's go back to Bookmap. So there's the break below the 175 key gamma strike. Now price trying to move higher. All right, let's go back to NASDAQ. There have been a couple of requests for NASDAQ. All right, again, the way I approach both the index products, the S&P 500 and NASDAQ. For the S&P 500, if I want to trade ES futures, SPY shares, SPY options, SPX options, I look at this chart. I subscribe to Rhythmic Data. I note the SPY and SPX levels on my chart. I do post the index relationships that I'm using every morning in Discord. And I've talked about before how to calculate those yourself. It's pretty easy to do. I use a script in Thinkorswim. All right, for NASDAQ, whether I'm trading NQ futures or QQQ shares or QQQ options, this is the chart I use. And again, I mark the levels on my chart. There's just a lot more information on this chart than there is on the SPY or QQQ chart. All right, so NASDAQ And the hero signal that I typically use most of the time for NASDAQ is the Mag 7 stock signal. So this is showing options trades and market maker hedging activity for the Magnificent 7 stocks. These stocks make a very large component of the NASDAQ 100, and they typically drive price. All right, so again, and this signal is showing right around 9:40, 9:45. Traders started selling calls in NVIDIA and the rest of the Mag 7 stocks. And then just before 10:15, they started buying puts. Orange line, blue line moving in the same direction. And NASDAQ moves lower. Let's go back, take a look at order flow. And again, I find the order flow in NQ here much more easy to read than the order flow in QQQ. It just makes a lot more sense. Cumulative volume delta falling. Here's the entry point for short after the cash open. Also with the NQ, you have icebergs and stops. These provide a lot of additional confirmation. In this case, sell stop orders, smaller traders, retail traders, their sell stop orders helping to fuel the move lower. All right, were there any specific questions about NASDAQ or anything else or any stocks you want me to take a look at? Please let me know and I'll be glad to do that. All right, so it looks like NASDAQ found resistance at QQQ 446 and the NQ lower weekly expected move just above that. Let's go back and see what options traders are doing now. All right, so we'll zoom in on the Mag 7 signal. So it's pretty much flat from here. Let's change to the total signal. So chopping up and down. Let's take a look at the NASDAQ signal. So right now, this is providing more clarity. This is the combined signal for NDX and QQQ. Definitely started falling right around 130. Let's go back. Take a last look at the SP 500. A little bit stronger than NASDAQ today. Bumping up against VWAP. But aggressive buyers note cumulative volume delta continues to rise. Also now buy stop orders fueling the move higher. Let's see what options traders are doing and then we'll call it a day. Let's go to the SB equity signal. Zoom in a bit and it is moving higher. A little bit of consolidation now, moving higher again. All right, so the S&P 500 trying to recover. All right, last call for questions or stocks. All right, everyone, I want to thank you very much for watching. Thanks for your questions and comments. Have a great weekend, and I will see you on Monday. Thanks again. Bye.